feel like they can be financially free. How much Bitcoin does someone need to have in order to feel like they can be financially free at maybe a younger age than 65 or 70?
Right. So I'm gonna explain that, but most people look at Bitcoin and retirement through that lens because that's all they've ever known.
Yeah.
So then the debate comes in the Bitcoin community is, well, how much Bitcoin do I need to retire then? Which is the wrong question. So the primary method today is to save for retirement and then live off my savings and hopefully I die with zero, which I think is terrible. We should not do that. And why would I want to die with zero? Why wouldn't I want my heirs to start at a higher level than I had to start from? So what the wealthy do is the wealthy play a different game. And the game of wealth is one where I earn fiat and I buy assets because assets are wealth. I don't sell assets for fiat currency. So when someone says, Mark, when are you going to sell your Bitcoin? I'm like, you don't even know the game that we're playing. The game is to get assets, always get assets. And what we do is we can leverage those assets. I call it, we can harvest the appreciation with debt. So rather than selling the asset and no longer having the asset that's compounding at 30 to 50% per year and then paying taxes on that, I can keep the asset but pull some of it off with debt.
Yeah.
So the real number is as long as the asset is appreciating faster than the rate of debt. So if I'm borrowing at 10% and the asset's going up at 20%, I could do that forever.
Yeah.
The way that I've broken this down, I call it the 5-year retirement plan. I expect Bitcoin to hit $1 million by 2030.
You do.
$1 million by 2030, 14 million by 2040, and 40 million by 2050. Let's say you're an average middle-aged professional, and let's say that you've managed to save $200 or $300 grand. That's not enough to retire. You're going to sell 4% of those assets. You're going to be good for $1,000 a month.
Yeah.
You're not going to live on that. But if I took 100 of that and put it into Bitcoin today, in 5 years from now, that could be $1 million. Now, at the rate of Bitcoin's compounded annual growth rate and harvesting with debt, I could safely pull off about 10 to 15% of that principal every year in debt. So I put 100,000 into Bitcoin today. In 5 or 6 years from now, that's $1 million. I could pull out $100,000 to $150,000 of debt against the $1 million in perpetuity. Never paying taxes on the money because it's debt I'm pulling out, not income. And the asset is growing faster than the debt is accumulating. So then in 10 years from there, you owe whatever, $2-3 million, but against like 20 million in assets.
Yeah.
And then when you die and your kids are your age, they're going to owe like $20 million against like $100 million of assets.
That video was absolutely crazy. Whether you liked it or not, you need to listen to this video because you need to hear why this strategy will absolutely blow up your wealth. If you ever want to be rich, there was good points in the video, but every point was made in an, wrong way. So it's absolutely do not listen him. Anyways, by the end of this video, you are going to understand the 4 level of assets that wealthy people actually use. So first, let's break this video into the 3 layers. And first layer is very childlike thinking with big words. It's like, he's thinking like he's living in some Cinderella land with, Pinocchio and, he's thinking he's Cinderella, and you're gonna soon know why. Second layer is how the math actually collapses immediately when you just calculate it out by yourself. And the third layer is actual 4 levels of assets that wealthy people do use. Anyway, so the first layer, magical kingdom he thinks he's in, where assets are only going up, interest levels are, never spiking, everything is wonderful, everything is going straight up, nothing happens. That's so childish, and to make your whole investment strategy based on that is so stupid. And the second layer, let's go through why the math actually also collapses pretty so straight away. First thing is that he assumes that Bitcoin appreciates faster than his debt forever, which is, never happened in history yet. So he seemingly knows something that, something is true that has never happened. He also pretends that leverage is free. Rich people, wealthy people actually uses the cash flow what productive assets give you for the leverage. But Bitcoin has no cash flow. And I of course mean that to cover for the liability that the leverage will cost to you. And also maybe the funniest one, he's confusing selling and harvesting. Because if Bitcoin goes minus 50%, the bank might just, just call the loan. And, with snap of the finger, you are wiped out instantly. Not taxed, wiped out. And I want to say in this, before we continue the video, do you know why richest investors in history are value investors? It's nothing crazy. It's that if you can do it by yourself, calculate it. Calculate the amount of money you can invest currently. And let's say you are doing like the richest are doing, and making sure your first priority is that you never lose money. And then calculate it in another way, where you get double the returns, which is absolutely amazing, and very rarely even professionals get better than the index. But at some point you go minus 50 or minus 80%, which is completely possible if you take a lot of risk. And you will quickly see, you will have so much less money in your older age. Never stop the wealth from accumulating. That's the most important rule if you want to make money. Anyways, so leverage plus non-productive assets, that's not a strategy. That's playing Russian roulette. So, Bitcoin anyways is kinda risky investment. Leverage is something no of the greats ever tells you to do. But to combine Bitcoin and leverage, that's like if you have watched anime like Dragon Ball Z. That's like seeing Goku and Vegeta fusion together, and their power is exponentially higher. That's the same thing. Your risk is exponentially higher. That's absolutely crazy. Anyways, now let's go to the 4 core level of assets. And sorry, I have said too many times absolutely crazy, but it's just I don't want you to lose your money. And these videos are absolute, let's pick another word, super horrible. Anyways, the first level, the best level, the level that Buffett loves, for example, productive assets. Assets that will give you something, farmland, stocks, anything. You have a good business that brings good cash flow. You don't know that, let's say your business brings like 100 units of cash per year, and the stock price is 200. Then the stock price goes to 50, but the business still brings 100 units. There is no worries for you. It doesn't matter how low the stock price goes, because the business is pumping out money every year, if it's a good business that you are investing in. So now let's go to the second layer or level. And these are so-called claim assets, so like bonds, stuff like that. They're good. They're pretty good. Yeah, nothing else. That's the second layer. Someone is owing something for you. So as long as you make sure the person or country or business, anything who is owing you money, if they are, okay with their wealth, then you're fine. Then let's go to the non-productive assets and the last 2 layers, because I need to separate these layers. First layer so the third level and first level of non-productive assets, there you will find like gold and silver. They are non-productive. They will actually give you nothing. And Warren Buffett, for example, he doesn't like gold. Even though everyone is currently saying that Warren Buffett is just too old to understand crypto coins, that's why he don't like it. all of these people ignores the fact that he doesn't like gold either.
If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe a tenth or 0.2%, and then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything. And productive assets, you can pay too much for a productive asset. But I bought a farm in the 1980s, and every year look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. But if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there.
Because it's non-productive. It gives you nothing. But at least gold has an, bottom point. Because at some point, if the gold price goes low enough, the people who are mining the gold, they are starting to go into bankruptcy. And then, of course, the gold price will start rising again because you have hit the kind of floor that it can go. So there is at least that, even though it still relies on the greater fool theory. So only way making money with non-productive assets is that you are able to sell it with higher price to the next person. That's the only way. But yeah, now the fourth layer. These are, I don't know what's the actual name for this, but I will say these are pure greed assets. They are non-productive and they actually have no floor. Again, I could invest in gold because I know if gold goes low enough, it's floor. It cannot go too low. We still use gold for many things. But crypto, for example, if it goes from, I don't know what's the current price is, 100,000? It goes from 100,000 to $5. Guess what its price? Guess what is its price? It's $5. That's it. That's its value. So, yeah, sure. I don't know where it's going. It might go up. It might go down. If you want to invest in it or gamble with it, just do it. But just realize that if it goes down 99%, that's what it's worth at that level. So it's super risky. And again, invest in it if you want. I don't care, but just know it. Anyways, so let's a little bit wrap this together. What the person was explaining in the video about using leverage and making money with owning assets, that works again only in assets that have no risk of going down minus 80% in an instant, like homes where you get rent every single month, but plus it's not really possible for it to go down minus 50% in an instant. That's where it works. But it just doesn't work in something like crypto, and it's so dangerous. Again, think of two of the things that rich people hate and make them fuse together like Vegeta and Goku. But yeah, hey, so let's end the video. And for you, the listener, I want to say, just go Google investment return calculator and go to see. Calculate how much you can invest, how many percentage you can make per year, and realistically, how many percentage you could make with investing in more risky assets. And then calculate, at some point, calculate like minus 80% drop. And remember, currently crypto, it actually isn't needed that much. In some countries you need crypto coin because the government of the country is so effed up. But it's more of a certain gang that likes the crypto. And it's more like looks to be more like an Ponzi scheme-like asset. Yeah, so be careful with it. I mean, you can make a lot of money with it, but you can make a lot of money with doing any gamble. So that was the video. Please like, comment, and subscribe. And yeah, say what you liked, and have a nice weekend.